Why don't we go ahead and get this thing rolling? So we got the recording going here. So let me first just start off by welcoming everyone in here to this special Market Vision 2020 mini-series event. We are really happy that Greg Schnell has decided to join us. Let me just give you a little bit of information, background about Greg, and he can fill in any of the holes that I leave out. But Greg and I go back quite a ways at Stock Charts. I met Greg, I think, back in 2011 at one of the chart cons. Is that where we met, Greg?
Yeah, that's right.
Yeah, I think it was. And then I came out a few months later and spoke to your Canadian Society of Technical Analysts group there in Calgary.
In November or something. Yeah, you picked a nice cold time to come. So.
Yeah, well, that wasn't smart, was it? I'm not going back to Calgary in November or December through February, for that matter.
Yeah.
Yeah, we got to know each other very well, and we've got different styles, and we'll talk about that again in just a couple minutes. But I just wanted to mention Greg is the Chief Technical Strategist at gregschnell.com. He specializes in intermarket and commodities analysis. I'm sure many of you know Greg from all of his work that he's done over on the stockcharts.com platform, through his blogs, through his shows. He's got a show over at Stock Charts TV right now, Market Buzz. I would strongly recommend that you check that out. Greg has won multiple awards as the top independent analyst of the year in Canada. He's based in Calgary, as I just mentioned. He's a past board member of the Canadian Society of Technical Analysts, the CSTA, and past chairman of the CSTA Calgary chapter. As an active member of the CMT, Greg speaks throughout North America on technical analysis, and Greg is also an author. He is a co-author of Stock Charts for Dummies, which you can pick up a copy over at stockcharts.com. That should be over at the bookstore, right, Greg?
You bet, yep.
Yeah, so anyway, it is awesome having you in here. I was telling everybody earlier before you came in, I didn't say anything really bad about you. But I did say that you and I have some very interesting debates from time to time because we do take different approaches to the market. So I was really looking forward to your presentation today. But how does it feel to be wrong, you know, when we have our debates?
I've never been. So.
That's the way our debates go. Neither one of us are ever wrong.
Yeah, so we have lots of fun. We have lots of things, and one of the things I wanted to share today, I'm going to share a couple of ideas, but when we work through the markets, it's so different. In Canada, we have very few technology stocks. We have 5, 10. Obviously, in the US, you have hundreds. So it's quite different. And I trade a lot of Canadian stocks, and there's a whole bunch of reasons, tax issues and stuff like that. But so I do quite a bit of investing in Canada. So for me to outperform the US market is very difficult, obviously, not having a huge technology sector. And we used to have companies like BlackBerry, and we currently have companies like Shopify and so there's different reasons to trade the market differently. So I spend a lot of time on commodities. And again, you know, if you're not a commodities trader, it's way different than trading technology related stuff. They have lows and highs often in the same year, really big swings, whereas a technology stock like Apple might run for years and years and years. That doesn't really happen in commodities. You get big swings. So I trade a lot of swings in commodities, not necessarily a week at a time, but more big multi-month moves, looking for 30, 40, 50% over a few months in my commodity swings. And when those happen, they're really enjoyable and all that kind of stuff, but it is quite a different strategy. So Tom and I see eye to eye on the markets every now and then a lot of times I'll be like, are you kidding me? I just want to be. So anyway, okay, well, let's get on here.
Well, as far as the event goes, I just wanted to clear up one of the housekeeping things here. As far as questions and answers go, everybody's, you know, all of the speakers in the past been a little bit different. So would you like to have a Q&A session at the end? Would you rather just have us email you the questions, you respond back to everybody, you know, individually? How would you like to handle that?
Yeah, why don't you just email them to me at newupdate@gregschnell.com, and then I will send back a response to you. And by doing that, you'll get you know, that way I can spend a little bit of time on the question if it's more one-off. So let's try and do it that way. I think that might be better.
Okay. So if the questions come into us, we'll forward them to you. And then if somebody wants to send you a direct question, What was that email again for them?
New update at gregschnell.com.
All right, new update at gregschnell.com. Make sure you write that down. And if you're going through, if you have a question, it's always, I know from doing presentations, if you have a question and it's about a specific chart, make sure you refer to that chart in the question, because sometimes, you talk for 30, 40 minutes and you get a question in the middle and you're not really sure what it applies to or what you had said. So just try to be specific with the questions, but Greg will get back to you for sure. So Greg, I'm going to let you take it away. If I have any questions, as you're going through, I may just interrupt you for a minute.
That would be good. Yeah,
just clarify something, but otherwise I'm just going to let you go. The floor is yours. Take it away.
Okay, thanks. Okay, and you can always follow me on Twitter at Schnell Investor, and my website again is gregschnell.com. Okay, so for our agenda today, one of my scans on improving momentum, and this, I have not shared this scan before, so I feel like I'm exposing a pretty nice secret that I've employed over a long time. This has been one of the better scans I've used to find great setups. Hopefully you'll agree when you go see it, the results. And I'm going to go through what you can see over at gregschnell.com. What can I offer that's a little bit different? So I'll just cover off maybe one of my newsletters and some of the other charts that I go through. And I'll be expanding that over the next few months. One of the things Tom has done really well with EarningsBeats has set up some specific charts in lists and say, this is my portfolio for the quarter or whatever. So we're going to try and roll things like that out on gregschnell.com based on the way I look at the market. So we'll go through that, and hopefully that'll help people be able to follow my work and why you might want to join in that. And then over the next probably quarter, I hope to have my first one out by mid-January. I'll be rolling out complete courses for systematic strategy for large wealth. So one of the problems I have is I don't really day trade. I want to be in the market in a big way, and I move my money in. And then what happens is if the market was going to go into a correction, which I'll show you what that looks like to me in a little bit, then I would either buy puts or something to protect for the downside, or I would actually just take the money off the table, or I would set a very tight stop. So if the stock kept going, I wouldn't get kicked out. But I want to make sure I lock in my profits. And so I am definitely in the camp of capital preservation is number one. And if I miss the big downsides and catch the big upsides, I'm going to make enough money in the market to be very okay with my returns. My goal is always to make sure that I do not participate in a big market move down. So that is a major defensive strategy for me. So let's jump into two things here. I want to cover off, first of all, this is a chart I make up, and it's looks pretty basic. It is pretty basic. It's off the Numbers platform, which is a charting program from Apple, and it's very simple. But it's going to share with you the concepts that I want to make very clear. So this blue line here starts on September 21st of 2018, and what you see here is the green lines and blue lines crossed. That is an important factor, but more important was it was declining already. So by the time we got to October 3rd, I already had a sell signal on the whole market. So it was like, I'm worried here that the market is going to roll over and it's going to fall hard. And what happens here is when this goes below zero or below this level, what this means is more groups are declining than accelerating. And so as long as that condition exists, we probably have a problem. And then what you see here is literally, here's your December 21st low, or December 26th low, January 4th and January 11th. And off we went, and we were up in a huge bull market for a long period of time. And then even when it broke down through this 80 level, this is when it kind of started to fall apart, and we fell down, and then we ran back up. So we had a 4-week correction, ran back up, and you can see that we made lower highs, but we were still up in this top zone, which is very bullish. And then towards the end of June, early July, we started to fall apart again, and then we came down and we spent the month of August in the doldrums, and then took off in September. And then for those that might have been reading my newsletters, one of the things that happened was we fell down in October into early October, and then we started to rally out of the hole. And so I've got a newsletter teed up from October the 12th saying, my market indicators are starting to improve, so selective buying is possible. And then by October 19th, we were really starting to run, and then off we've been, and we've been up here nice and strong. So we are still well apart from each other. So what this does as a backdrop for me is, how scared should I be? And right now, the only thing that concerns me about this chart is we don't have as many groups as bullish as I would like them. So that adds caution, but by far, I want to be invested in the market. So I recently went on a cruise for 3 weeks, and while I was gone, when I go on vacations, I don't usually stay all in. Sometimes I'll be all out of the market. In this case, I left my energy stocks run because I actually thought they'd hold up okay. But for the most part, I reduced my positions in a lot of the other sectors and just stayed flat. So while I go through this market, what I'm trying to explain is, this is how some of the stuff I do on gregschnell.com that helps people understand how bullish to be. If the market is ready to correct, then they'll get the same signals and at least be able to either protect their portfolio a little bit more or stay a little more involved when we have China trade talks and we have Fed meetings and all of these things we've lived through this week, that for most people would be like very scary. In this particular case, it tells us to be very bullish. And so that's kind of how this is one of the charts. I have 50 or 60 of these. Like if we scroll up, it's a bit of a charting exercise. But one of the ideas that I like to cover off is, when I'm working through the markets, I want to take all of the different opportunities to analyze it differently. And by doing that, that's going to give me the knowledge. So when I'm invested, how confident can I be? And when I want to start taking money off the table, I'm okay there. Like if all of a sudden I see that the majority of the market is ready to turn down, I'm happier to be in cash or to have put puts on to hold my position, because I don't know if it's going down for a week or a month or 2 months. But typically when we get to the point that more than or almost half the market is ready to decline, I don't want to be hanging around to see how big is the problem. I'd rather just set my stops tight, either get kicked out that way or keep my cash. Because again, the indexes, most of the large caps are going to follow the index because they are the index. So as that rolls over, I want to be very aware of the trend change. Okay, so that's kind of the backdrop for one of the things I offer at gregschnell.com. And then with that, today I'm going to share with you a scan. These are some of the ideas that I would have. And what this scan does is it keeps track of momentum starting to turn up, but not just turning up. It's starting to turn up at a critical place based on the work that I do. So I can get into this code a little bit. I don't want to go too deep, just so it's not boring for everybody. But basically, I want my PPO line to cross my PPO signal, but I want it to cross within a certain part of the chart, or I just want the PPO line to be crossing zero. And so what that does is it goes and looks out into the stock market and says, I want to find charts that are starting to turn positive in momentum. And more importantly, Tom Boley always talked about a reset with the PP or the MACD, where it comes down to zero and resets. I find that's a beautiful setup. So in this particular case, that's exactly what it looks for, is resets near the zero line. And so the way to do that, if we go and look at what a chart response might be to that same sort of thing, is in this particular case, so the scan was run this morning, and what we see here is, here's the PPO turning up right around zero and starting to rise up again. And the last time I did that, that was a pretty nice spot. There's one over here. Let's go look at how the charts responded. So again, we had a turn up here. This was a nice 4 or 5 month run. Here was a nice 3 or 4 month run where things ran up from 230, 240 to 300. And then that's a whatever, 20% gain in 3 or 4 months. So really nice. Here we have another one setting up. And again, we're sitting right at the 10-week and the 40-week moving averages, but we're starting to turn up here. And this gives me a chart to go look at. It doesn't necessarily mean it's going to be a trade I put on, but it's a chart to go look at. And in this case, I didn't have very many today, but I'm going to just go to the top of this list. Let me just do this first, and then I'll go back and show you how I would take it from the scan code, run the scan, save it in a chart list, sort it. I want you to get more excited about the actual charts in here before you start to think about it. So what you'll look at here on this chart, you'll see that this big uptrend was dominated by the PPO just stayed above zero. So in general, positive momentum, and you're oscillating a little bit at very high levels. When this big trend in momentum ended here and the stock started to go sideways, that was a 6-month period where you could put your money into something else and have it keep working. As this uptrend ended, there was a pretty clear clue, right? You could draw a trend line on the momentum and it started to fail. But all these bounces near zero were pretty good. These in here were at a high level. These were up around 5. And again, you could either stay in them, but this ended up being quite choppy. And the overall market, remember we topped in early 2018, chopped around all summer, and by September came up here, and then the whole market kind of fell apart. So down here at the lows here, we're starting to turn higher and the market's taking off. I might not get the scan because it's down here at minus 2.5. I don't usually scan that low, but I would get it as it starts to go above zero. And because remember in that scan, one of the criteria was either it was turning up with the PPO just right around zero, or it just went and got all of the stocks that were starting to go from negative momentum to positive momentum. And in this particular case, I think almost every stock had a nice run in early January, heading into the April-May timeframe. So for me, I would follow that up. Well, now what we've got in this particular case is we've had a downtrend in momentum. We're right near zero and it's starting to turn up and just went positive here. And when we look at the chart, it's just breaking out to, or very close to breaking out to new all-time highs, and it's in semiconductors. And of course, if semiconductors are going to start to run here, then always you want to be a part of that. So that's kind of the type of scan I want to see. And then when it starts to outperform, it might become a top performing stock. Skyworks is a good example. It turned up in September. It's been on a crazy run lately. But you have a 3 or 4 month run here where this stock just takes off and you get this nice push. So in this case, 80 to 116. You're not going to buy it at the lows and sell it at the top, but you're going to get a good part of that run. So there's a good 25 or 30% there in a couple of months. So here's Amcor. And you see this one turning up. It's crossing zero, so that's the reason I got the signal right now. It's also going above the 40-week moving average. I'm not so sure that I like this particular stock. It's well on its way. Nothing wrong with it. I do like the fact that it broke out a 5-year base, ran up, pulled back to that same base, and is just starting to climb out now. So this might be something I would consider. It's in containers and packaging. It's not a great sector for me, but it would be okay. Here's financials, and again, they've been starting to turn up as the interest rate environment has changed. So this has been a stock a little slow to the party, but if it was going to start to break out now, this is pretty nice. And again, just well set up here. Cooper, healthcare. Healthcare's been on fire. This hasn't really participated, but you can see momentum is just turning up here. I like the fact that it broke out of this big base, started to make new highs, came back down, and is starting to turn up again here. Nothing wrong with the chart. You could at least set your stop very close. So something like that would show up here. Capri Holdings. This is clothing and accessories. And again, PPO finally going positive for the first time in over a year. So this is like a new 52-week high in momentum, if you will. And what we want to watch for is, can this stock actually change momentum? I like that the downtrend is now breaking, moving above both the 10-week and 40-week. This stock's quite interesting. When the PPO or when the scooter ranking gets going so strong, it holds up pretty well. Went really strong, held up pretty well. And we're right back there now again, trying to get up here into the top performing stocks. And again, retail can perform well all the way into March or April from a seasonality perspective. So this stock could be just getting going, not bad. Ford Motor, and what we see here is The PPO turning up right near zero, I like that. Breaking out to a new 3-month high. Again, is automotive my favorite sector? No, maybe not. But at least it's presenting the chart for me to consider, and at least it's making higher lows here for the automobile business. That's a rare occasion. Here's HP, and again, this chart's too choppy for me. I don't like these big earnings gaps every 3 months, so that would probably be something I would avoid. But again, it's definitely trying to get going again, and we see the momentum starting to pick up here. Monster Beverage driving sideways for 2 years. Not really sure that that's going to make a big difference. So I would probably ignore this just because I don't really like all the gaps in here that are very painful to live through. Maxim Integrated Products, same thing, 2 years sideways. This one, PPO is just trying to turn up around zero, so maybe rather than buy it here, I might just set an alarm or an alert to go off at $62 and let me know if this thing's about to start going through to new highs. Perigo, new 52-week highs are only a stone's throw away. PPO got above zero, come back down and touch and take off. If that was the case, I'd be way more interested in this stock. Again, the scooter ranking, this is a common element sometimes where you'll see the stock really surge, pull back, and then when it starts to get into this high area again, looks like it did that back here, this can run for a while. Now, again, I don't know what the stock does. I don't know anything about it. It's in pharmaceuticals. The big trend is down. Is there really a trend change here? That would be something that would cross my mind. But, I'd probably just look at the overall chart and say, is it something I want to participate in? No. But very simply, momentum trend has been higher for a while. It's not selling off anymore. But quite frankly, it's just ground sideways in a really big bullish year. So I'd say big relative underperformance there. So here's Tractor Supply, and this stock, had positive momentum for 2 years, dipped below zero, and if it was to roll over and start to come out of here, great. If it does exactly the opposite and roll over here at zero, that is one of the places I want to be the most defensive. So here's a good example where you're below zero, you come up and your PPO actually dies below zero and rolls back over. That is what we call the winter position, where you're actually below zero, trending down, and you didn't even have enough momentum on the last rise to get above zero. That's really horrific. And what you can see is the stock price fails quite quickly there. Here we are at zero. If this is going to start getting back above the 40-week, that's probably going to be a nice breakout and worth buying, because it's been a 2-year uptrend. Can it get going again? And if not, I want to avoid it. And this one, I don't go short, but for me, if this rolled over again, it would be like I would make sure I was out or had puts to protect any position I had. I don't want to see that. So it's always, again, these charts are just something to look at. But so that was the list for this week. And a few weeks ago, there was a lot more on the list. But what we want to keep watching for is just how that rotates. So let's go through and just talk about that scan again. So we run the scan. It's going to generate some results. I usually might set it up either with the scooter ranking, and then I would just save this in a chart list that I could look at any time. So whatever, we're just going to pick scanning breakout, and then preserve sort order. And what that does is it allows it to stay in this scooter ranking. So it puts a number at the front of all of these so that I can sort them in that order. You can see stock market's going down. Actually, we're down 12 from yesterday's close on the S&P. And what we see here is, these stocks aren't performing that well today, but we could go look at 1 week and just say, are they better? Yeah. So looking at these, this is how they've performed for the week. We've got the scooter ranking to give us some clues. So those can give us some really nice setups. And again, if you go look at, I'm going to pull up Skyworks here in just a second just to show that chart. It was on the article I sent out yesterday. But when you look at these setups, they are really, really nice and easy. And the whole idea, of course, is finding a chart shape that you like. So in this case, this is Perigo on a daily. I like to look at them on weekly. It's whatever fits your bill. You know, that daily chart hid this big 5-year downtrend, so that's one of the reasons I like to stay on a weekly chart. You can see that the 200 day is actually starting to turn up here, so maybe there's something going on. Scooter ranking's actually been behaving better on a daily chart. The big thing for you is to be able to scan for something that you want to see and then convert that into a chart list that you can work with. So again, have a whole bunch of scanning chart lists set up. So all you have to do is dump them in there. Go look. All of these ones from here all the way down to here are just places I could drop a whole bunch of different scans into. So they're not really set up for, I promised myself that if I ever want to save something in one of those chart lists, I move it immediately to a different chart list, because I write over those and I never go check them again as a rule. And the reason is because otherwise I'd always be, well, what's in there? I should go look. Oh, those might be nice charts. That isn't how it works. You have to have a scan place where you can go drop them in, roll through them, throw them out, write over them. It doesn't matter. So for me, that's one of the big factors. Okay, let's go down here, and I'm just going to grab the newsletter. And again, let's go look. One thing I'll do first is I just want to show you the S&P 500 for this year. So remember, early September 21st, I was starting to get a signal that the whole market was going to go lower. And by October 3rd, we got that signal, and that was pretty much market top, and down we went. And right in here, we bottomed out, and then this is where I started to get a higher low signal already. I was buying on this dip, but I also had one stock that didn't go so well. I can share that. I shared that with Tom last week. It was a little bit of an aggravation for me because it's been an unbelievable move in 2019. But anyway, up this ran. We failed at the top of May, bottomed at the start of June, failed at the end of July, had an ugly August, rallied again down. So this part in here was really, really choppy. And my data told me that it was really choppy. And one of the subscribers I have over on gregschnell.com sent me a note and said, you know, Greg, I'd rather not get so chopped around. And the right answer is, wouldn't we all? When you get these nice long runs, they're really easy to be involved in. And one of the reasons to not just sell your shares out when the market is rolling over is because you might have a stock that powers right through that. But the problem for me is I don't want to hold through downtrends. I don't want to find out if this is going to become this. I don't know when this tops out here, how far it's going to go down. I only know that my market momentum is weakening enough to give me a downtrend. So I would say it's very helpful. It all depends on how aggressive you want to be. But in my case, if you just traded the S&P on the back of that information, you'd have had a buy or a sell, a buy, a sell, a buy, a sell, a buy, a sell, a buy, a sell. Or so far, you're still on buy because we haven't had a sell signal. So you'd had about 8 trades over the last year. I don't think that's too bad. Anyway, that's very simple in the background how I would do it. Now, I just want to show people the type of newsletter that I send out with this type of information. And the one I've selected is the one right from October the 12th, right in here. And again, without the knowledge of what's coming at us, starting to set up for trading around that. So just try and give you an idea. And I think I've got it hiding over here. Let's just change the view to full screen mode. Where are we? Full screen mode, that's what I want to find. And so what we see on this is October the 12th, and I just said trade deal opaqueness. And one of the things about the commodities is you have a lot of swing trades. Again, when commodities are in favor, usually they're in favor when the market is up. And when commodities start to get weak, it concerns me because that's usually might be a signal that we have bigger problems coming up in the equity market. So commodities give me some information like that. But here's what I wrote on October the 12th. This week saw major buying on the averages. One of the concerns last week, would we get a positive outcome from the trade deal? Here we are 3 months later, still talking trade deal. Anyway, as we go through, my Schnell Strength Index continued to deteriorate even though the week was up. And again, we were right down in that low. So when we're looking for those types of changes, that's what what I'm trying to find here. And so I mentioned that JP Morgan was kicking off bank earnings on the 15th, and then we'll see Apple had already broken out. Semis and IPOs are trying to improve. If the market can't respond positively by Friday, that would be worrisome. But anyway, summary: improving to selective optimism, up from very defensive. Let's jump into the charts. And so here I show some commodity related charts, a brief description, and we started to get a green candle on the CRB. We're breaking this big 2-year downtrend, and so the oil trade has been very nice for me off of this low. I think a lot of the stuff, the market's up whatever 8 or 10%. A lot of the commodities are up 20 or 30% since then. So gold was rolling over. So as the market was becoming more optimistic, gold was giving us the signal that that wasn't the trade to be in, and it was time to leave. So that was helpful. Copper momentum starting to improve, and we saw the PPO had a downtrend here for 4 or 5 months, starting to make higher lows, bullish, trying to break out of this trend. Copper's up here around 280 right now. So lithium, watching this trade, and it's gently trying to break out of there. I would say it's succeeding somewhat, but a little different. Here's rare earth metals. And then Caterpillar, this chart was in a nice big wedge, and we can go look at it after. But the whole idea is to try and find these setups that are starting to break out. And again, if Caterpillar momentum started to turn up above zero, that's a pretty important bullish place, and I would want to be a part of the trade. Here's the Shanghai Composite, and again, it was setting up with higher lows. Could it break through? Well, recently the Shanghai kept grinding lower and lower and lower, and it was making lower highs for 4 or 5 weeks. And one of the questions was, why was America doing so well if the other side of the trade deal wasn't? And so we'll keep watching the Shanghai next week to see how that's going to unfold. And then again, this is all back in October. So the S&P was kind of grinding sideways right in the middle in here. And what we saw on the NASDAQ Composite was, we had the ceiling, just call it 8,100, and then we had the Russell at the bottom of the range trying to hold here. So the charts weren't obvious yet, but all of a sudden my indicators were starting to improve and things were starting to pick up. So the advanced decline line so far this is for the S&P 1500. This is one that Arthur Hill introduced me to. This is a percentage improvement, but the way I like to show that is I have an uptrend here, and as long as that uptrend can hold, I want to be interested. So far, it's still holding up very nicely. And then this is an 11-period moving average of the advanced decline. And what you see here is, we were very bullish coming out of January, and by March, we had this brief little pullback. So this is telling you to worry, but my other data held us up all the way into May. So I think it was just a little stronger clue that we were still okay. Bond price suggests being careful with REITs, and one of the reasons for that is if the whole stock market was going to start to turn up, then REITs would roll over. Well, REITs actually rolled over very nicely, and I think if you were to have done a spread trade, the REITs were falling and the overall market was rising, and the gain was almost 10% between the two of them instead of 3 or 4% just being on one side of the trade. Market summary, just kind of roll through. Here's the US market and the Canadian market, and you can see Canadian market didn't look like there was any room for improvement yet, but the US market had started to pick up in the important areas like retail, semiconductors, and industrials. So globally, big picture, everything's looking pretty good. I always like to say, where's the Shanghai? And in there, as we work through this China deal, because that's important for commodities. China uses about 50% of the commodities in the world. So as we look at this chart, it gives us an idea. When you have a big global backdrop starting to improve, we had the US market start to improve. Canada hadn't picked it up yet, but everything else was starting to run. Pretty helpful place. And I think on marijuana, I've probably been one of the better analysts telling you to, maybe go look now, but don't start buying yet. And we haven't really had a buy signal out of the whole group yet for a long time. And yet I get emails every day from somebody saying, this is the net pot stock to go to $100 or something. And it's literally over and over and over. And yet we haven't had a buy signal for Weed Wednesday was October 17th, 2018. And most of the pot stocks topped out around then. And Weed Wednesday was legalization day in Canada. And since then, they all, it was buy the rumor, sell the news. And so the day that it became law, the stocks declined for a year. Well, now we're on 14 months. So we're just starting to see some of them, change their CEOs, starting to pick up, different managers to try and handle the business. We've still got 150 companies in there. Most of them will go bankrupt, and a few of them will probably survive out the other end. So anyway, with all of that, that's the kind of newsletter you would get from me. And then up here, I have a 1 hour video that specifically goes through all of my charts, doing global macro analysis, covering off currencies, bonds, equities, and commodities. And as you roll through all of those, I try to set the stage for why I would be bullish, why I am not bullish, and then a link to some important charts. And that's kind of a rolling group of charts that I might have shown 2 weeks ago, but the chart's still important. And as new charts come in, I just keep adding them in, but I try to keep the list contained. So anyway, that's kind of a guide for the type of newsletter you'd get inside, some of the data that I calculate in the back. And I just showed you one chart out of 50 or 60 that I calculate every week to try and figure out market breadth and strength. But again, when I put a position on, so I think I trade a relatively large size account. And so I try to make sure that I'm in the market for the big moves up, and I am either in cash or protected when the market is having big corrections. And so, again, don't want to trade often. I want to trade when it's important to trade. So that's kind of how I manage my portfolios. But over the next 30 days. I hope to have the first course written. I'll put it in Teachable, where it'll literally go through and show you a video about, okay, here's what we're looking for. Let's go find a scan that's going to generate that type of result. Then talk about how we manage the trade over a period of time, how we add new trades in and take new trades off, and then keep a running portfolio as we go forward. So if any of that interests you, I'll be sharing more of that on the Market Vision 2020 show, and be happy to have you come and listen in on that one. But today was a snapshot of one of my favorite scans, and I think it generates pretty nice results. I want to take you over and show you how it did with Skyworks, and just show you a very nice turn here. So on my PPO, wobbling right here around 0, and all of a sudden you get this nice signal. So you had this, it rose up here and just got above 0 and failed again. And I mentioned earlier, you don't really want to be around when it's below 0 and starting to fail right there. And sure enough, that was a big drop. And then in here, it had pulled back again. And then you get this nice breakout, and all of a sudden this thing is at new, it's making new 52-week highs on the PPO long before the stock is making new 52-week highs. And that's the real clue. And then all of a sudden, $85 to $115. So you're up $30 in, 6 or 8 weeks with a really nice setup. And while I was on the cruise, I mentioned one of the videos I did for that week while I was away was rolling through 40 of the 5G stocks and just which ones looked set up nicely. And obviously one of those was Skyworks. But okay, Mr. Boley. So with that, that's kind of an overview of what I had today. If there's any questions that you have or ideas, what do you think?
Well, first of all, great presentation. And just a reminder to everybody watching that you can go over to gregschnell.com and check out Greg's service. I've been following Greg for a long time, and we go back and forth in terms of how we approach the market and so forth. But I always find your take very interesting, Greg, and especially with your expertise being up in Canada. When I look at energy, you're the first person that I go to. It's like I know Greg has not just the technical expertise, but he also has a lot of the fundamental expertise looking at some of the energy stocks and the various commodities. So it's always a really interesting presentation. I do have a couple of questions for you. Number one, does volume ever come into your analysis when you're looking at stocks and when they're going up or they're going down? Does volume mean anything to you, or are you strictly based on price?
Well, I will use price a lot more than volume. My two favorites are price and momentum rather than price and volume.
Hmm.
But here's I think Tom and I were talking about energy about 6 weeks ago, and I said, one of the energy stocks I really like is CNQ, and I have a whole bunch of fundamentals behind that. And I own this one. But what happened right here is you see the PPO starting to make higher lows, and on this pullback here, it was, this is meaningful, 27 to 22, kind of a 20% decline. They happen quickly, but they also go up quickly. So anyway, you get a buy signal down here at the bottom of September. Remember, October is when the market's starting to finally improve. So this one shot up in September, pulled back, held at the 10-week, and starts to take off now, goes back above the 40-week, and your PPO is going above zero, for the first time in 6 months, but more importantly, really for the first time in a year. And the stock kind of had a top all in here with one little kind of church spire sticking out in April. So there was a resistance line right at 28, and now all of a sudden the thing's up another 10% in a couple of weeks. But in my opinion, the energy stocks are probably going to have a nice run into next year. And one of the reasons that I'm starting to see that is when I go look across a suite of energy stocks, and I've used the ticker symbols on the US side here for CNQ. It's also traded in Canada, but Suncor is another nice one. And it's, just setting up here. It's got kind of 8 months sideways. CVE is setting up here. Big sideways zone, starting to wait for this to really get going. If you go look at, one that U.S. Investors might know, here is Chevron Corp grinding sideways for 2 years. I mean, crude's been all over the map, and this stock's held relatively tight. So when this finally starts to break out, PPO right at zero, like, I get really excited. And anyway, it's just interesting how I trade the energy stocks compared to Tom trading Roku or something different. So
Yep. Yep. Now, if you go back to your SWKS chart, Skyworks, for a minute.
yeah.
Now, when you look at this, I mean, I look back and I see overhead resistance from 2017 and 2018 right around $115.
Yeah.
So when you look at a chart like this and say you get in when that PPO or MACD goes through the center line, when a stock makes a big run like this one has, and it gets up close to that 115 level where you can see that's where sellers have been in over the last couple of years, do you have a tendency to take profits, partial profits, or do you simply look at that improving momentum and give this an opportunity to break out to the upside? How do you approach that?
If I was nice enough, if I was buying this as I was getting on the cruise ship, that would have been great. But in this particular case, it was breaking out literally as I left, so I didn't participate in this one at all. But as it starts to run here, I want to be in around here as it's breaking out. CNQ is when I just showed you. Suncor's just ready to lift off. So these ones are sitting here, and as they start to break out, they may or may not get hit with volume. And so volume, well, I'd like it to show up. If it doesn't show up, that's just fine. I still want to see improving momentum. I know that as we get here, we're going to hit some sort of selling, right? We're going to have somebody take profits because that's just what they do. And maybe we'll get a pullback back to the 100 level. If I owned it from down below, I would probably just hold it because I don't want to pay the capital gains in and out. I would rather try to hold through this. But as long as my momentum stays, these lines are wide apart. They could come back down, touch, keep going, touch, keep going. You're in one of the big groups for 2020 with 5G. And again, if we just go down here to one of my chart lists, at the top here is 5G. And so then anytime I want to go check which of the 5G charts, I go in here and I could just go to summary mode, view all, and click on summary mode. So I'm all set up in sort of industry groups or industry ideas. And in this particular case, you just say, what's going on for the last month in this group, and then say percent change. That's just nice technology starting to break out. Look at this, Micron and Alibaba all starting to run. Those are your four leaders. Corvo is beautiful. I mean, that chart is just crazy good. So anyway, with with names like that leading the pack, at least it gives you a place to go look. So I would try to stay in that trade now, even though I know it's hitting resistance. But I literally think you're on the front edge of this whole industry group exploding higher for 2020, and you just want to make sure you're all set up inside the group before it takes off.
How do you get your list? Is this a trade secret? How do you know all of these companies are 5G stocks?
You know, I am a really not smart person, so I cheat. I do things like Google top 10 5G stocks,
Okay.
and it's going to give me a list from Zacks, and it's going to give me a list from Investors Business Daily, and it's going to give me a list from CNBC, and it's going to give me a list from whatever. And I just look through all the names and go, okay, I should put them all in a list and at least just keep track of them.
Yeah.
And you know, look at all of these names are beautiful charts now. Yeah.
Yeah, I'm impressed with a lot of things you do, but one of the things I really am impressed with is the way you have everything so organized over at Stock Charts with the chart lists. And immediately if you're thinking about a particular topic, you just go right into a chart list that you've already got set up to be able to look for trading opportunities and some trade candidates and so forth. So very, very interesting. And I know that takes a lot of time. I've done chart lists, and I haven't done nearly as many as you, and I know how much time it takes to put these together. So just great work, great presentation, awesome job.
Thank you. I think the biggest thing is, you want to have all of this stuff set up so when the market starts to improve, you're ready to rock. And if all of a sudden you're watching TV and somebody says, oh, this is a great idea, and you go check the chart, well, that's one chart. What I want to see is the whole industry start to take off. And it's that launch by industry that really matters to me, and where 50% of your lift is usually from the industry group. Apple would be the exception. It was a computer hardware stock and was all alone for many, many years. But when copper turns up, you're going to see this whole copper mining sector rotate, right? So all of a sudden, here's 1 month, these are up. These are penny stocks, but let's go down to something with a scooter ranking. This is, FCX is up 20% in 1 month, and it's a $12 stock. Okay, who knew? Well, from that newsletter I just showed you, we were starting to rotate into commodities and into industrial metal stocks and stuff like that. And I said, this China stuff's wobbly, so just keep your stops relatively tight, but try to hold the trade, and it's been a great one. So you see these charts just kind of exploding higher. This is $9 to $13 since October. You can get by on that kind of money. So.
Yeah, they can pay for cruises.
So anyway, I like the commodities. That's a 50% gain off kind of our buy signal down in well, let's just click on the chart. From that October 12th signal, you're riding it up from 10 to 13 so far.
Yeah. Yeah, that one definitely is showing a lot of improvement. You can see up there in the scooter too, for the first time breaking up above 90.
Yeah, new 52-week highs on the scooter. There, that's a clue. Full stochastic stuck near zero, and don't we want to see the PPO start to get going above zero now? All of this big uptrend in here was all with positive PPO. Here we're fighting a negative PPO. When these commodities all start to turn, and you can see this is breaking a big downtrend here as well. But when all of these commodities are starting to turn, I just get so excited. It's like Christmas shopping. Which commodity do I want in the Christmas hamper? And there are so many of them that are starting to take off. Lithium is starting to move. So all of those names are getting interesting. Anyway, if you're interested, that's kind of the stuff I cover off on gregschnell.com.
All right, one last question. And I know that, you've talked a lot about commodities. You like commodities, energy, and so forth. And now you've mentioned the 5G, as it maybe a theme for next year. But I also know you follow all of the U.S. stocks. And so my final question is, and maybe you want to answer this, maybe you don't, but you want to give us any other thoughts about 2020 as far as maybe themes, other themes in the U.S. that you like?
Well, so I'm going to talk about energy a lot on that market vision. And one of the things that I don't think most people are set up for is when oil topped, maybe I should just go get this chart, because I think if there's going to be money to be made, there's going to be some 10 baggers in this section. So West Texas crude, let's get a bigger chart, maybe 10 years, If we go 15, you'll get the 2008 top. So what we want to see here, see in 2014. So first of all, energy was 150 bucks. At this point, every oil company had massive programs, right? We were building whatever we could to make oil come on stream, and oil went to 150 bucks, and it was just unbelievable. Well, in 6 months, with the overall collapse in the great financial crisis, we had, energy dropped roughly 80%. Okay, so that shocked everybody and kind of slowed things down. But those mega projects like 20 billion and up, those mega projects take 5 to 7 to 10 years. I mean, they were spending all the way through that whole thing. Mm-hmm. Then what happened is we got to this point right here, and all of a sudden the Saudis said they'd no longer support the price of oil, and down we went. And so what happened was we hadn't finished investing in this major energy cycle. They were still just kind of running out, and they were starting to talk about building some new ones. And then this collapse hit. What we've just lived through right about here is the fact that no new major energy projects are ongoing right now. There are none. And so what happens is oil declines. You have a reservoir with a given volume of oil in it, and as that, the really good ones last 20, 30 years, some of the ones over in the Middle East are even longer than that. But for the majority of the rock in the world, oil drains out of it like a bucket. There's only so much you can get, and the rest of it is ungettable. We call it the producible reserves. And so out of the total reservoir, how much can you produce? And that has a decline rate every year. So you have to keep drilling to keep the volume of oil in the system going. So we keep looking for new rock that we can take oil out of. And the global oil demand is over 100 million barrels. Grows roughly 500,000 to 1 million a year. So we have all of these mega projects that aren't going on. And so the problem we have coming up, and shale, tight oil we'll call it, or shale oil, oil out of shale rock, all of the top tier perspectives were being drilled. And the reason was because you could drill them and make money right away from the well, but they had really rapid decline rates. So they'd pump 1,000 barrels a day for a couple months, and they'd drop to 300, 200, 100 very quickly. What that meant was you have to have a Fibonacci ratio just to keep your drilling holding your production flat. So you needed another well to keep the first well, then you needed 3 wells to keep 2, then you needed 5 to keep 3, 8 to keep 5. And eventually you just blow up. You can't keep hiring rigs at that rate, and you haven't got enough frac rock to keep going into at that rate. So we've drilled the tier ones. We've had our spacing too tight, so now we have to have less spacing on poorer rock. And we have no mega projects coming on stream. If the global economy picks up at all, if there's any pickup in global economy, the demand on oil will start to show, and it's not going to be a one-year thing. But what you'll find is over time is just the stress of the system will realize we are going to hit a point where oil production isn't going to keep up with oil demand, which that's what commodities do. Low price stops drilling and high prices get drilling. So then we'll start to try and ramp it back up again. But the oil boom that we had in the US, production growth is still growing, but it has slowed dramatically. It's much less than we were having over the last couple of years. So anyway, all of that adds up to be a great situation for oil to start to migrate higher. And under that backdrop, XOP is at 30-year or 20-year lows or 13-year lows, I think. This chart's way down here, 2009 lows. So you're sitting right at the bottom of the scale. Oil was, $30 here. We're at $60 oil, and this thing can't get a bounce. I just, my PPO trend line here is starting to crack. Maybe it needs another higher low, but I want to focus on energy in 2020. So
awesome. I should have known better than to ask you one more question, because I'm not going to ask you anymore.
Okay.
But I do want to, again, point everybody to GregSchnell.com. Go over, check out his service. Really appreciate you coming on here, Greg, and kind of explaining your strategy and how you approach the market. I'm sure everybody got a lot out of this. And this is really just kind of the precursor to what we're going to be doing at Market Vision 2020 in January. It's on Saturday, January 4th. You don't have to be present. Every session will be recorded. So if you do want to sign up or you're thinking about signing up, now is the time. We have an early bird registration going where you can save some money. We'd love to have you. So make sure you check that out. We will continually keep you updated through our Market Vision 2020 newsletter that goes out a couple times a week. And I think, Greg, you had also, you have a free giveaway, right?
Yeah, sure. For anybody who wanted today, we're doing a draw, and it'll be for 3 months free just to get the newsletter and my video once a week. Just check it out for 3 months and see if you like it.
Yeah, and I think in order to do that, you've got to answer the poll question, which was in this morning's newsletter. I believe that is correct. But it's a question that Greg wanted to have answered, have everybody answer, and then he'll give you his response at the event. But just by going in and answering that poll question, that registers you and puts you into this pool of folks where we'll have a drawing, and we'll announce that next week. So make sure you check that out. Mary Ellen had giveaways. We had giveaways at EarningsBeats after, with our event. Arthur did a giveaway. Now Greg's doing a giveaway. This is one of the big reasons why it is important to be a Market Vision 2020 newsletter subscriber, because the poll is in the newsletter. So you've got to be a subscriber in order to be included in these drawings. But Greg, it was an absolute great job. Looking forward to your 2020 presentation. And it's only, believe it or not, can you believe that 2019 is almost over?
The decade is almost over. It's unbelievable.
The decade is almost over, and it's been a pretty good decade from a stock investing perspective. A lot of volatility and a lot of fear out there throughout the decade, but overall not bad. I have my thoughts, pretty bullish thoughts about the next decade, but I guess we better take it one day at a time. Anyway, again, thank you all for stopping by. We really appreciate it. We will have another one of these mini-series events coming up next week, and we might have 2 of them next week. But just keep watching that newsletter, because we will let you know. We'll get you those speaker profiles. You'll find out some interesting facts about all of our speakers, which I think is pretty cool. And we're all looking forward to getting together on January 4th to give you our ideas about 2020 and what lies ahead. So everybody have a great day. Again, thanks, Greg. And everybody go over to gregschnell.com and check it out. Have a great day, and we will see you next time.
Thanks, everybody.